pitches are part of Unicorn.Events, world's largest startup pitch competition by geography, and they were honored to host GSD Demo Day. I'm going to invite Gary Fowler to tell us more about it. The main, I say, visionary behind GSD Venture Studios. Gary, I'm going to pass the mic to you. So great to have you here. I think you're muted.
Yeah, sorry about that. I just want to say this is an honor to have each and every one of you here today. Like I said, I feel like it's family hour because I get to see some of you once in a while, but my heart is open. I just want to say, we're excited. Great entrepreneurs come from anywhere. Innovation is not limited to Silicon Valley. My friends are here from Tokyo, Lagos, Nigeria, the Netherlands, Tel Aviv, all over the world. Innovation happens wherever talented people are willing to solve difficult problems and to be able to tackle bold visions. Today, that vision has grown into an ecosystem of 193 companies in GSD, representing 73 countries around the world. They're from pre-seed to Series C growth companies. But before we hear from our founders today, Victoria, I'd like to take a time to recognize an extraordinary group of judges, and I appreciate every one of you. Collectively, our
Of
judges have
course.
found billion-dollar companies, led public corporations, invested in hundreds of startups, advised governments, transformed industries, and helped shape the future technology, finance, healthcare, aviation, Brian, artificial intelligence, Allison, and entrepreneurship. Today, we've got
Let's dive straight into that.
what's
Go
that?
ahead. Let's dive straight into that.
Yeah, so we have today, I want to just introduce a couple of, I'm going to say a few words. We have over 65 people, judges and investors here today, but Tim Gannon, the co-founder of Outback Steakhouse, who helped build one of the world's most successful restaurant brands, growing from a single location to more than 1,400 locations worldwide. We appreciate, Tim, you're coming today. My good friend, Brian Flynn, who is the founder of the largest airline in Mexico, and the managing director of Diamond Stream Partners. And it's good to have him here. Actually, we were roommates for a little bit of a time, so it's great to have you here, Brian. To all of Allison, my friend that we've seen in many events together. Allison is a legend in Silicon Valley, an innovator, Stanford fellow, helped build the evolution of digital advertising, investments like Google, Reddit, Plaid, Discord. We appreciate you. Lorenzo de' Medici from the Medici family in Italy. They founded banking in 1482. He's involved in family businesses, banking, global finance, et cetera. Great to have you here. Michael Terrapin, the CEO of Transform. He's known as the godfather of crypto, decades identifying and supporting transformative technologies. Maren Schweitzer from the Schweitzer family of Germany, good friend of mine. Great to have you here. Maren Kingsley, Kobayashi, the Kobayashi Group in Japan, an incredible entrepreneur from Asia and Africa. He's built companies doing hundreds of millions of dollars worth of business. Stratos Davlos, the founder and CEO of AI Byte. Great to have you here. I don't think Alexander Soroka is here, but Alexander, our heart is with you. You're doing an incredible job, and thank you for supporting GSD. Jason Mall, founder and CEO of 3EQ. Great to have you here, Jason. Deborah Magid, Paul Russo, Peter Lukianov, Mark Lakaroff, David, we appreciate you. Plug and Play, Laura Druyan, Sasha, Mornell, Catherine Hill Ritchie, Ronaldo Curtin. Thanks, Ronaldo, for joining. I know this is your first time, but it's great to have you here. And I just want to say that, companies you're about to see represent the future. We've worked really hard. We take a very laser precise approach. I look for the people first. And then what we want to do is like having a piece of clay to take that clay and turn it into an extraordinary company, whether they're a Series C company like Indigo Tech or they're an early stage company. They're building technologies that are literally going to transform industries and transform the world. And that's what we look for. What excites me personally the most is not the technology, but the incredible people that have joined. Maria from the UK, it's good to have you here today. Entrepreneurship is one of the hardest journeys anyone can choose, Been there myself 17 different times. It requires visions when others cannot see what you're doing. It requires resilience when obstacles are overwhelming, seem overwhelming. And it requires courage where success is far from guaranteed. Every founder presenting today has chosen that path, and I'm honored to have them on board. Many have overcome extraordinary challenges. Many are building environments with limited access to capital and investments. Yet they continue to innovate, they continue to build, and they continue to pursue a vision that has the potential to change the world. That is why GSD Get Shit Done exists. We believe extraordinary founders deserve extraordinary opportunities. We believe innovation belongs to everyone. And I personally believe that the next great company can come from anywhere because intellectual capacity is evenly spread, but opportunities are not. To the founders today, today is your moment. Tell us your story. Tell us what problem you're solving. Tell us why it matters. Tell us why your team is uniquely positioned to win. Today, you're presenting as part of a global community of now 193 companies in GSD. You're building it. I want to thank the judges. I appreciate your time. I want to thank you, the investors here. I want to thank all of you. And most importantly, to the founders, I want to thank you because the future belongs to you. You're building it. Let's go get started. Let's get shit done. Thank you.
Excited. Thank you, Gary. I think if we would like to introduce the judges, how are we going to do this given there are so many people?
Well, what I was going to do is I wanted to go down through some of the ones that are new. I wanted to go down through and introduce them. It's going to be difficult with so many judges today. But Allison, do you mind saying a few words? Is Allison there? It's hard to even say.
Hi, can you hear me?
Yeah, we hear you. Allison, could you say a few words about yourself? Thanks for
Uh,
coming today.
Sure. Allison Nguyen, I've been investing on and off for 30 years. Our career started with Google, and even before then, my partner at the time had written the original Google search engine at Stanford, and I had started and ran an engineering, co-ed engineering fraternity where we helped to write the business plan for Google. And a lot of the tech founders that you know today from PayPal and all over came through our co-ed engineering fraternity, and that kind of like led us into the whole, VC startup world. And it was a great entree, and I've been really honored to see how companies such as Google has rise from nothing to trillion-dollar valuations, and have been investing in the Silicon Valley area, AI, robotics for the last 20, 30 years.
Thanks, Allison. Brian Flynn, you're on mute, Brian.
Brian, out of Seattle, Washington. As Gary alluded to, we co-founded the largest airline in Mexico, Volaris. Co-founded a bank that we grew to over $1 billion. Co-founded a casino marketing analytics company that we ran for 12 years. That was a 35 times return. And now we just invest as VCs and aviation technology companies.
All right, super. Thank you so much. Michael Flight.
Hey, Gary, thanks as always for inviting me. Just the amount of firepower you have on the judges and the incredible startups you always bring. It's just phenomenal. We started out in real estate and branched off into tokenization of real world assets. And that got me involved with AI startups. And most recently, we're involved with a fitness events and app startup, and also, prop tech and a number of things we're investing in right now. So thank you again, Gary. It's always super great to be around you.
Thank you. Appreciate you coming. Ronaldo?
Hey everyone, Ray Curtin. I've been investing here at Forge Point Capital for about 5 years. Before that, I was doing commercial diligence at a consulting firm. We invest in Series A, cybersecurity, software infrastructure, and AI companies. Great to meet you all.
Thanks. Jason Ma.
Gary, always great to see you. And my name is Jason Ma. I'm the founder CEO of 3EQ, my little family business. And Gary and I, we had a blast along with my good friend Allison Nguyen as panelists in the single family office trends in the age of AI panel, the flagship panel at the Silicon Valley Economic Forum, SVEF, where I was a chairman recently. That was fun. Packed
Yeah.
room. The audience, the buzz remains today. And then, Gary, you're so kind to invite me to your pod recently. We talked about the future of family offices, AI investing legacy. What's important to me is besides running my family business, some of you know me as a chief mentor, next gen leaders. I have a blast privately mentoring, coaching, select one-on-one, entrepreneurs, senior executives, CEOs, and also teenagers and college kids. And then I'm also building another very exciting patented applied AI tech venture myself as an entrepreneur, as an investor, highly select. And I happen to get invited to speak quite a bit. So thank you again, Gary.
Yeah, I'm sure. Alicia?
Hi, thank you for having me. I'm a scientist in biotech turned entrepreneur turned investor. Have been in Silicon Valley for 13 years now. Have over 100 companies invested, mainly anything that has to do with biology and physics. We do energy, space, mobility, a little bit of fintech, lots of biotech and plant-based foods. Happy to be here. We're very international. We have a extensive investment club with individuals and family offices from all over the world. Gary, a pleasure to see you. Jason, too, and Deborah.
Yeah,
Alicia.
good to see you.
Yeah.
Okay, Deborah? Deborah?
I think she's muted.
Oh, she's muted. Okay. Serafina?
Oh, Deborah, can you? Yeah.
Okay, yeah. Sorry. I saying is that I've known Gary for many years, as he said, and we do both enjoy a whiskey. And I was at IBM Ventures for over 20 years, mostly in strategy and M&A, and building relationships with VCs all over the world. So I've been to many of the places that our founders here are from and our judges. And I'm just now starting a new venture fund called Next Star with a colleague, Swati Dasgupta, who worked with me for many years. Happy to be here.
Yeah, thanks, Deborah. Serafina?
I'm a repeat judge.
Yeah, that's good having you here. Serafina?
Hi, everyone. My name is Serafina. I'm a VC-backed entrepreneur turned investor. So I did my own AI startup in 2016, raised 3 venture capital funding, and sold my products in US, Korea, Indonesia, and China. And I got into venture world and managing director at a founder institute, incubated over 8,500 tech startups, raised combined about $1.9 billion at a combined valuation, $35 billion. And also, I have my own VC firm called XC Capital. I invested in C to Series C deep tech startups such as humanoid robotic, logistics, supply chain, space tech, and longevity. I am so thrilled to be here. And thanks for having me again, Gary.
Thank you, Serafina. Appreciate it. Kelly?
Hello, everyone. I'm Kelly Lu, founder of Mans International. Thank you, Gary, for having me. It's great to see familiar founders and fellow judges here today. Having built 5 ventures and invested in early stage healthcare and smart living companies, I know both sides of the table. I help tech founders scale through strategic positioning, GTM strategy, and cross-border expansion. So my judging lens is scenario maturity. What must be true for your technology to drive real revenue, adoption, trust, and scale? I'm excited to see your progress and hear your strengthened stories. Thank you.
Thank you. Marianne?
Hi, everybody. So I run Founders Bay. We're a community of 200,000 founders, VCs, and family offices. We are rooted in San Francisco. We just expanded to New York, and we're now one of the largest communities of founders, VC in the world. I'm also head of DevRel at U.com, and we do AI search infrastructure. We just released a finance API for VCs. So come find me if you want to chat about Founders Bay or U.com.
Thank you, and I'll see you this evening.
Yes, we have an AI engineering happy hour. We're renting out an entire arcade. So if you want to join, I'll put the Luma here and see you,
Yeah,
Gary.
absolutely. I'll be there tonight. Abby?
Let's go.
Hi, Abby. Origin Capital. We invest in U.S. companies, immigrant founders, and we provide international coverage. We've done deals in AI, mobility, fintech, and proptech.
All right, thank you. Sarah?
Hi everyone, this is Sarah Pracha, CEO of Pracha Ventures. Pracha Ventures is Pakistan's first UNGC member startup accelerator organization. We are supporting startups through strategy, innovation, acceleration, and impact-driven growth. I'm honored to join as a judge to evaluate emerging founders, support strong ideas, and encourage the next generation of scalable startups. And thank you, Gary, for inviting me like always.
Thank you. Daria?
Hi guys, great to meet everyone. And Gary, thank you for having me back. My name is Daria Sakaris. I am a partner and COO at Stratos Venture Partners. We invest in B2B SaaS companies, primarily in fintech, insurtech, and regtech. In the seed and Series A stage, we're very active investors and like to take board seats.
Thank you, Daria. Dimitar?
Hello. Hi. Thanks, Gary, for inviting me. I'm a financial advisor here in Silicon Valley for many, many years. I represent an angel fund of about 90 angel investors and family offices, mostly in Europe, looking for opportunities to invest in Silicon Valley, United States. So looking for good opportunities to invest.
All right, super. Peter Lukianoff?
Hello, everybody. Good morning or good afternoon. My name is Peter Lukianoff. I'm based here in San Francisco, but I've been a global citizen. My career basically has been to connect Silicon Valley with other parts of the world. Started one of the first venture capital firms in Eastern Europe, focused on that market with Cisco as an anchor investor, and currently doing the same, but connecting a new market, which we'll be hopefully announcing soon in the US. And doing cross-border, connecting that with Silicon Valley, and that fund will be focused on what we call trust and sovereignty infrastructure for AI, data, and governance systems. Excited about that. And also, I wanted to let everybody know we've also started a nonprofit called the PositiveTechInstitute.org, and there's a way to basically participate in a Hippocratic oath for technology to essentially make sure that we're developing positive technology for the future. So PositiveTechInstitute.org if you're interested.
Thank you. Cherise?
Oops. Hi, everybody. It's a great pleasure to be here. I am globally based as well. And like Peter, I'm mostly focused on connecting different parts of the world to Silicon Valley. I'm based out of Singapore and in Europe and in the US. So I'm bridging 3 continents in that sense. As an executive leadership and resilience authority, I work with Fortune up to 200, 100 companies and high growth founders worldwide. I'm a global venture partner and board advisor at Venture Forward Capital, which is focusing on repeat founders building applied vertical and agentic AI companies from Series A and above with repeat founders. And I have been multiple times now over the last 4 years with the Unicorn Battle for Startups active as a judge. And I bring a combination in of C-suite resilience engineering, executive communication expertise, and hard investment lens to my role here as a judge today.
Excellent. Laura?
Thanks for having me, Gary. Lara Druyan. I am the founder of Private Liquidity Partners, a secondary fund focused on late-stage venture secondaries. We use AI to identify the companies most likely to exit in the next 3 years. I'm also a venture partner at Silicon Valley Data Capital, classic seed and early stage venture fund. I've done venture and early stage, both tech and operating roles for a long time. I've also served on the Canadian Imperial Bank of Commerce's US board, and I ran a successful digital transformation at the 10th largest bank in the world. So I often tell entrepreneurs I'll be one of the few VCs you've talked to that actually has been on the buying side of technology as opposed to the selling side of technology.
Excellent. Thank you so much, Laura. Tanya?
Great to be here.
Hey, Gary. So, kind of like Jason and Allison mentioned, to know Gary is to love Gary, and to try to moderate Gary on a panel is nearly impossible. So I also have fond memories of some of the work that we've done together. Nice to meet all of you. I'm Tanya Long. After a 25-year career with 400 products in market and 20 M&As, finally hit the venture circuit. Currently am the managing director of Daymaker, managing partner of Daymaker Ventures. We focus on capital orchestration for deal by deal founder investments, agnostic of space, but at the pre-seed and seed level. So it's been a lot of fun to get started in this after a few years as a private investor. So I'm enjoying it, and have just built Daymaker Connect because I've been leading people building tools forever, and we finally decided to hunker down and build our own. So Daymaker Connect is launching in the next week to help us make better use of these networks. So Gary, I'll be back to you on that as we all grow in the ways that we are able to manage the partnerships we create through these kinds of events. So that's
Sounds
me, Tanya
great.
Long. Nice to meet you.
Thanks, Tanya. Lorenzo, are you here?
Yes, I'm here. Can you see me?
I don't see you.
Hold on a second. Hold on a second.
It's my brother Lorenzo.
Can you see me now? It says start video, but I don't know if I should click something.
We see you. Yeah, we see
I
you.
can see you.
Okay,
Okay.
perfect.
Yes. Yeah.
Perfect. Perfect. So I'm Lorenzo De Medici, president of the De Medici family office, and I have my foundation, who is the De Medici Foundation. We are trying to do what my ancestors have done for centuries in finance, in philanthropy, in art, and that means support and invest in venture that can create community revenues. We share profit with a lot of our community partner. We invented what is venture capitalist for philanthropic profit. It means we mostly invest in things that we know can give back to the community, part of the revenues. And we love art. We have a lot of art investment and art support. And we are in data collecting and data sharing. We are in agriculture. We own winery and olive oil in Europe and hotel business. And we invest in a lot of startup at the beginning stage. And we are based between Florence and California during the winter time.
And his family, so Lorenzo's a good friend of mine. We've had a lot of fun together, but his family funded Leonardo da Vinci and Michelangelo. He's got the best family stories that I've ever heard in my life, actually, and a good friend. So thanks so much.
My family was a pioneering. Oops, sorry. My family was a pioneering of investing and supporting artists from the early stage, and innovator as Galileo Galilei, Leonardo da Vinci, Michelangelo, and many more. From the beginning, they had a scholarship program in the Renaissance in the 1400s, and so we're lucky that we continue the tradition. And Gary is a good friend of this journey.
No, I
And
appreciate
Gary,
it. Thanks, man.
I've got to say, Lorenzo is an incredible artist in his own right, and Lorenzo, I don't know if you noticed, but I have your painting right here. So
Beautiful, Peter. I just saw that you were there. I just arrived in my office, and Peter is a great man, is a great art collector and art supporter. So thank you. Good to see you.
Yeah, no, it's great. Fantastic. Thanks, Lorenzo. Mark Lockroff.
Yeah, hi Gary and everyone. Also a shout out to Peter and Laura. Haven't seen Laura in a long time. Mark Lockereff. I'm a partner at Portal Venture Partners with Peter Lukianoff. He gave you the background on what we do there. Personally, I've spent the last 30 plus years in Silicon Valley as an investor, starting companies, CEO, and coaching CEOs all over the world. Notable investments that I've made are Facebook back in their Series B, Riverbed, and my one I'm most excited about right now is a company called Lighten, which is a unicorn now. Was a seed investor in those guys in the material science space, but really, really interesting, fun company, totally different than the AI world. And then for Tim Gannon's sake, once upon a time, many years ago, I was part of a small ownership group, a couple of us who owned the Eastern Washington and Idaho Outback Steakhouse franchise. So got to know Chris Sullivan real well, did a lot of work with him on various deals. So I just, for Tim's sake, thought I'd throw that out there. Good to meet everybody.
Thank you. Adrian?
Hello, everyone. Can you see me? Can you hear me?
Yes.
I'm Adrian Niculescu. A pleasure to be here and to support Gary's efforts into bringing amazing startups into Silicon Valley and to the next level. I'm a solo GP at TomorrowWorks Capital, which is a venture capital firm founded in 2023, and also created in the UAE TMRW Venture Network, which is a pretty growing, I would say, exploding in a good sense, network of investors. We do secondary deals, we invest in startups. We have for Q1 and Q2 2026 a group of 6 startups. We are raising for about $16.5 million. And I'm pretty happy all the time to support such initiatives and to be, I hope, a positive force in the venture capital world. Thank you very much for having me.
Thank you. David Kim?
Thanks for having me, Gary, and pleasure meeting you all. My name is David. I'm a senior director at Plug and Play. So Plug and Play is one of the most active VC firm based out of Sunnyvale. We invested in over 2,000 plus startup, with 40 plus of them reached the unicorn status. One of the most exciting unicorn was, as I briefly mentioned in the beginning, was Flutterwave, based out of Nigeria. They just backed by Ripple, one of the largest crypto company, to reach $3.3 billion valuation. And StarCloud, if anybody are interested in space tech, they're building the data center in space. Just within 1.5 years, they raised $170 million with $1.1 billion valuation, and raised another $250 million in the last 2 months to get into $2 billion valuations. I specifically targeting Asia market. I founded Korea and Taiwan office and working on setting up the Vietnam office with getting a lot of support from Ellison and a few of our team members. I'm very excited
with Gary for 5 or 6 years now. I'm chairman of Everstar. We've invested in some of the GSD companies, and we've had a nice run with them. And the relationship with Gary's been outstanding. Most of my career was running public mutual funds, so I find I've done startups for the last 10 years, and I found that to be much more rewarding than looking at the next public company and where it might trade in a couple of weeks. So my relationship, as I said, with Gary has been really wonderful, and I'm very thankful to be here.
Thank you. Jason Jacobson?
Hi, Gary. Thanks for having me. Jason Jacobson. I'm in the Chicago area. I currently run Propellant Ventures. Our first fund invests in early seed stage B2B tech based in the Midwest. We're also working on a second fund, a deep tech innovation fund that will look outside the Midwest. Still heavy focus, but we'll look outside as well. And then I currently run the Midwest chapter of the Founder Institute. So glad to be here. Thank you.
Thank you. Rajesh?
Hey, folks. First of all, it's an extremely interesting group of people. So more than anything else, I've been fascinated listening to everybody and their backgrounds. So thank you for having me here, Gary. So I'm out of Palo Alto in the Bay Area, and been an operator basically the last 25 years with startups, all the way from sort of seed, pre-seed to pre-IPO. And I did my own startup last couple of years in the AI agent space for go-to-market. That's my background. I mean, the startup currently does like process improvement workflows and process optimization and things like that for a large enterprise. Outside of that, so I'm an angel investor and, thinking of a new fund as well. But my sweet spot is B2B AI infra seed, actually. Seed. Pre-seed is a tad bit early, and anything after seed might be a bit late. So I like to operate right there and work with talented founders. Really, it's such a joy to work with founders, and having gone through the journey myself a few times, I know how hard it is, as Gary mentioned. So it's really wonderful being on the journey with folks. Thank you.
All right, thank you. Paul Russo?
Sorry, I was muted. Yeah, so I'm probably the oldest guy here, but I've been on both sides of the fence, started 3 semiconductor companies. My first one was the hottest stock on NASDAQ in 98. I've been investing in startups for over 30 years, learned a lot of expensive lessons. A major trend I see today is liquidity issue, and we're going to solve that. We created a new fund, a startup fund, 9 years ago, and developed a model it's a statistical model, invest globally in anything, thorough vetting, only written off 15% in 9 years, and now we're going to be going public on the New York Exchange to allow everybody in the world to safely invest in the startup asset class.
Great, thank you. Dennis?
Yeah, hey, thanks you for having me. I'm Denis Gutenka, representing Network here. We're a syndicate. We invest only over 100 deals already. Industry agnostic, like seed pre-A. And also we have a defense fund supporting the Ukrainian defense ecosystem, raising money in the US. Thanks you for having me. Thank you, Gary.
Okay, thank you. Frederick, did you go yet?
No, I'm still here.
Okay, if you could, that would be great.
For sure. Good to see you, Gary. Must have been like 7-8 years already. Right. So good to see many people on the panel, which I recognize. And for those of you who have not met before, an honor to be amongst you. So I am currently working on a more mature fund, where being the sole GP, called AIM Multiplier, kind of self-explanatory what that is. Working to create a 300 million group mainly through partnerships and helping people. So I've been working with VC, raising finance and advice for many, many years, and I'm very happy to help out, even if that's not my main investment, but I'm happy to help out and connect in any way I can. And good to meet you all. Thank you.
Yeah, thank you. We really appreciate it. Joris?
Caught me off guard there. Thank you, Gary. Thank you for having me to start with. Just a short introduction. I'll keep it short and sweet. My name is Joris, serial entrepreneur. I think I'm the only non-investor on this panel again. Kind of the adverse opinions. I'm a serial founder, so just left one of my previous companies, sold parts of it as an exit to make more time for another company, of which the founder I've met through GSD, Gary. So props to you for that. We're a medical company, and it's going places. So I'll be making my hands free for investing more time in this. But this kind of thing has always been a ton of fun, and I think I've been here maybe the longest, Gary. I'm not sure, but I'm kind of a veteran here. So it's always a pleasure to be here. And again, like you said, it feels like family hour. So thank you.
Thank you. Am I missing anybody?
You are missing
Gary,
your brother.
Yeah.
I'll go ahead. Who am I missing?
What's up?
Kingsley?
So, yeah, Naresh is here.
Yeah, should I go ahead?
There you are, brother. Sorry about that.
It's all good. It's all good. Hello, everyone. My name is Kingsley Kobayashi. I'm Japanese Nigeria. I've been in Asia for over 35 years. Serial entrepreneur investor. We invest across the border. We are sector agnostic. We've invested about $250 million in different companies. And Gary is my brother. We've been doing this for over 7-8 years. And I just want to thank Gary for giving opportunities to people across the globe as we bridge
the developed and underdeveloped country. You are doing a great job, and thank you very much, and thank you for having me here.
Thanks, Kings. I really appreciate it. Okay, anybody else? Anybody else I'm missing?
Yeah, hey Gary, this is
Naresh.
Naresh.
Hi, Naresh.
Thanks for inviting me. I'll keep it short. Based in Silicon Valley, I've been innovator entrepreneur in the past. Of late, I've been investing through my family office, and in addition to that, I'm also representing an angel group of about 70 angel investors. We typically like to invest in seed, pre-seed and seed, maybe up to Series A under certain circumstances, but early stage start. So happy to be here. Thank you.
Thanks, Naresh. Appreciate that. Okay, Victoria.
Yeah, shall we go through with the startups?
Yes.
We have 5 amazing startups today. So we're going to do this. Each startup will have 3 minutes for pitching and up to about 4 minutes for the Q&A. Q&A will be first come, first serve. So judges will have to raise their hands, and I'm going to get to you. And each startup, we suggest that judges rank based on one of 2 things. Either investment potential or potential to become a unicorn. That's why you have a diverse judging panel. Every judge got individual voting link, either through our email system or through Franz, a wonderful person from Gary's team there at GSD. And this is the screen that the judges are going to see. So there is no submit button, and they're going to be asked to rate a startup from 1 to 10. And the system has already started letting you rate them live. Everyone has individual voting links. And with that, let me present our first startup, who is going to share their screen and begin the pitch whenever they're ready. Indigo Tech, represented by Will. All right, Will, are you here? You ready?
Hi, Victoria. I am ready. I'm going to send my share screen. Okay.
Wonderful. Let's do this.
And what a great panel. Amazing to see everybody here. My name is Will Graylin, and I'm the CEO of Indigo Tech. And before I get started to tell you more about what Indigo Tech is, I will wanted to just share a little background on myself. Gary, thank you so much for inviting me, and it's great to see some of the familiar faces also. And as a vertically integrated transport and autonomous tech company, let me first share a little bit of background on myself. I was an immigrant to this country, born of a Chinese artist whose favorite artist, by the way, of his time is Leonardo da Vinci, and Michelangelo came next. But my mother was actually a Jewish American Chinese that got married to my father, and we immigrated to this country when I was 12. I became the first Chinese immigrant to become a U.S. nuclear submarine officer. That's me right here with my beautiful wife and my 4 children, and 2 of them are now active duty, serving in the Navy, and my daughter is actually in the Naval Academy as well. And there's my oldest son, who's doing great things also. So after my Navy service, I came to the Boston, and I got 2 masters out of MIT, AACS, and MBA, and started my entrepreneurial career. I'm on my 5th and 6th startup at the same time, and my 4 previous exits all were able to sold to large publicly traded companies. The last one was acquired by Samsung for $320 million, became Samsung Pay. So now let me get started to tell you more about Indigo Tech. Okay, here we go. The problem that we're solving right now is really this explosion of on-demand of delivery of everything, but the aging infrastructure is unsustainable. Right now, 95% of our deliveries are done by gas, spewing out 400 grams of carbon per mile. We're talking trillions of miles collectively, at roughly $3 per package and also per parcel. And charging is still an infrastructure barrier for these vehicles to turn electric and turn autonomous. So we're talking about $1 trillion problem, but also $1 trillion opportunity. In Go, we are literally reinventing the wheel and integrating the next generation of vehicles, energy delivery, to also provide services for delivery and autonomy. So let me go through each one of these and how we're vertically integrating each. When I say we literally reinvented the wheel, I mean that. A technology out of MIT that literally puts active propulsion and suspension in each corner to free up dramatic amount of space and to be able to make the vehicle more efficient. So it's lighter for the same amount of space, for the same propulsion system and active suspension. And when you're talking about 100+ patents here, we're also integrated the charging technology with charging solutions that have 5 times more ports, can charge 5 times more vehicle. And now by integrating both the vehicle as well as charging, we can have 3-minute swappable batteries, which I'll talk more about. That allows for robotaxis as well as vehicles to much faster get back out on the road, and to now intelligently orchestrate the last mile deliveries for vehicles, for ride hail, to be much more efficient for local economies and local communities. This is one of the vehicles that we're building, and that's the most innovative vehicle since the Tesla Model S. I was one of the first Tesla adopters. I bought 5 different Teslas, but this is really, truly innovation. When you talk about low flat floor with nothing in between the wheels, facilitating wheelchair access, you can literally stand up inside of the vehicles, walk in and out, and it's unbelievable. And we're bringing that to market. And as you can see here, adding the swappable battery into this technology means that we can swap out batteries in 3 minutes or less and get vehicles out on the road to combine both charging and swapping in the same infrastructure. And now to take that technology to further develop and build transportation hubs and communities to aggregate the demand for delivery, for ride hail, for large national as well as local solutions to bring them to be much more efficient from a vehicle utilization. So to wrap it up, we are consolidating Go Motors, Go Charge, and Go Loop. We have about $180 million that will be consolidated revenue by the end of this year, $45 million in revenue in EBITDA. 8,000 vehicles under management. We have almost $500 million already of pre-orders of our vehicles. Our strategic investors are FedEx, Foxconn, SK. Our strategic customers are some of the largest players in the world. We've raised $165 million thus far, and we're going public hopefully in the next 6 to 9 months behind the window that SpaceX has actually pushed through. With a winning team, defensible
That's about time.
$1 trillion market.
Just letting
We're
you
wrapping
know.
up right here. Thank you, Victoria.
Awesome.
And if you need to reach me, look at my email here. So I'll open it up for questions here. As you can see, you know, I'm super excited about the opportunity here.
Thank you.
All right, wonderful. Let me ask Kelly to go first.
Thank you, Victoria. Hi, Will. Great to see you again.
Hi,
So
Kelly.
your strategy is ambitious because Indigo is not just building vehicles, you're also building charging and transport services. So as you enter the next phase, where do you expect real gross margin to come from first? And how flexible is the model? If, for example, the capital market tightens, and what would you keep core versus partner out to preserve runway?
Great question. So number one, unlike previous companies that are retrofitting existing technology and building their own greenhouse factories, we are leveraging supply chain from Korea, from China, and from other parts of the world where we don't have to build our own factory. We want to be the Apple and ecosystem of Apple to the Foxconn of those who can manufacture on our behalf, so we can be capital efficient. And that allows us to really deploy our capital into the deployment of these vehicles into better experience and better unit economics, and ultimately smashing the cost per mile down is the most important part. So that's how we plan to be efficient, is to leverage other people's factories, but our software, our hardware, and our services, where the greatest margin to drive down cost is by controlling every aspect of the transportation infrastructure.
Great. Allison, you have a question?
Yes, great to see you again, Will. I'm really impressed with the presentation, especially the strategic investors. I have two questions on the technology. Your two main differentiators are the smart wheels, where you embed the suspension in the wheel as opposed to underneath the car. So I wanted to talk a little bit about the trade-off. If you remove the suspension and put it in the wheelbase, it's going to be a rougher ride. How do you deal with that? Are you just looking at B2B, number one? And then number two, with the hot swappable battery. So what we have in the market right now is a supercharger. What's the CapEx between a hot swappable infrastructure that you have that's new versus what, like something like, we all know is this, the Tesla supercharger, which is an existing infrastructure and it works and the CapEx papers out. So two questions on
Great.
your two main technology differentiator, which is the smart wheel, and then also your hot swappable battery.
Great to see you, Allison. Thank you for the questions. So first question is our smart wheel technology. So if you can see on my screen here, traditional hub motors basically only allows you to put propulsion into the wheel. Our smart wheel technology, what's unique out of MIT, is two stators that also allow for up and down propulsion. So in other words, we can adjust ride to absorb the bumps and potholes to actually create a smoother ride and a safer ride, more stable, while we free up all the space in between the wheels so that we give that extra space and a lighter, more efficient vehicle. And a lighter, more efficient vehicle means a smaller battery. So we're actually providing a smoother ride, Allison. So that's number one. Number two, the swappable battery technology means a 3-minute swap of an entire battery automatically with no plug-in, no humans that have to go and pull into a free spot, plug it in and charge for anywhere from 45 minutes to 2 hours. So providing that vehicle utilization with a 3-minute unmanned swap is unbelievably better for utilization. I hope that answers your question. And we don't need megawatts of power to have that fast charging. For the battery to have super good technology, we can use existing technology for battery chemistry and hot swappable for vehicle utilization.
Brian Flynn, you had a question.
Yeah.
And then also Rajesh.
Okay.
Brian, go ahead.
Go ahead,
Yeah.
Brian.
Quick question. Just have you heard of the company called Wheel Tug?
We have not.
In aviation? Just you may want to take a look at them. They have a propulsion technology for that's in the wheel as well. So when you mentioned your portfolio of patents, you may want to see
we have
whether
105 patents on our technology with 2 degrees of freedom. And our solution, because of the 2 degrees of freedom, is also perfect for eVTOLs. And we have eVTOL companies actually after our axial flux permanent magnet motor for that reason. And the high torque, beautiful.
You're definitely going to want to check them out or whatever. I'm not sure where they are now. I haven't talked to them in a year or so. But anyhow,
Thanks,
Wheel
Brian.
Tug. You're welcome.
So in the interest of time, let's do Rajesh, and then Dimitar and Jason, if you could ask your questions in the chat or in the Q&A, because I see that there will be even more questions right now already in the chat room.
Okay, who's next?
Yeah, well, fantastic product, and thanks for all the info. My question is around the go-to-market piece, right? Looks like you're establishing a new brand, right? Number one, so that's a spend right there. Second is, Serafina, I think one of the previous folks had a question around the capex for all those charging stations. Like, I mean, if it's completely different infra, how are you going to deploy it? Let's say all over the country, right? In the United States. Yeah.
So number one, from a capex standpoint, we are partnering with some of the largest parking infrastructure companies. In fact, I'm about to sign a deal today with the largest parking provider. They have 5,700 parking locations in great territory. We're looking at working with companies like that, and all of this CapEx can actually be financed, debt financing, non-dilutive financing. And that's the great thing. When you prove 0 to 1, the 1 to N can be financed in different ways. And then as far as the type of market that we're going after the ride-hail delivery market and setting up these Go Loop hubs. So we're not going after consumers to go and compete against Tesla and compete against, the BYDs of the world. And our goal is to be able to deliver these kinds of solutions right there to people that need it, the fleets that actually need it, and to collaborate with them to go to market.
Thank you.
All right, marvelous. Dimitar and Jason, could you ask your questions in the chat? Because
My
I think we're
question is
completely out of
regarding
time.
the battery swapping technology. I know that Tesla tried, some other companies tried this business model. What are you going to do with the battery? Who owns the battery? Okay, I swap the battery, then what? What happened with the old battery?
Great question. So if you look at who's actually been success, it's in China. A company called NIO. They have 3,000 battery swapping stations. They own the battery, and it's their most profitable division. And after setting up that kind of a network, the ability to handle those batteries lower the cost of the CapEx, allows us to also keep the vehicles out on the road, and improves the ability for us to recycle those batteries and be able to swap out those batteries. So it's a beautiful architecture. But in the United States, for Tesla owners like myself, you don't really need a swappable battery for consumers, right? I just charge it at home, and we can charge it in apartments. But when you're talking about ride-hail delivery vehicles, robo-taxis, you really want that swappable stations. And when you can control both the chicken and the egg, you can solve for that problem.
Okay, wonderful. Just going to say we're going to try to be on time, but I see, for example, someone asking in the chat about the race. So because we stream in more than 100 countries, if we are not allowed to mention how much each company is raising or mention this at all, because otherwise we're going to possibly get banned.
Just
on
contact
the
me
list.
over email, will@indigotech.com, if you're interested in participating in our Series C before we go public. We have a little bit left.
Yeah, exactly. So I assume that every company is raising, and you can ask in the chat, for example. All right, wonderful. Thank you, Will. We're going to go to Matrix Edge, represented by Elaine. All right. I think you might be muted. We can't hear you yet.
Elaine, you're muted.
I think she is unmuted. We just can't hear her for some reason.
I'm unmuted now. Can you hear me now?
Yeah.
Yes, absolutely.
Can you start
Okay,
again,
right.
please, Elaine?
You have 3 minutes. I'm going to remind you when you have 30 seconds left. So let's try to go for it. Let's go.
Is it sharing? Okay.
Can you share the full presenter view? I think it's with the play button.
Share. Can you see it now?
Mm-hmm. Yes. Wonderful.
Okay, great. Let me go back to the first one. Hi, I'm Elaine Fawn, co-founder and CEO of Matrix Edge. At 3 a.m., every parent of a child with type 1 diabetes asks the same question. Will my child wake up in the morning? I felt this version of fear as a mother myself. My partner's family lived it every single night for 30 years. His sister Katrina had type 1 diabetes. Despite all the devices alerts available today, parents are still left interpreting data on their own. Her parents are drowning in information, but starving for insight. Every tool collects data. None explains what changed, why it happened, and what to watch for next. Meet Claire. Claire automatically pulls all the wearable data, glucose, food intake, insulin, sleep, activity mode, and lifestyle in one place. Then Claire looks at the patterns over time and helps parents catch dangerous lows before she even feels them. We're not replacing existing devices. We build the missing intelligence layer between raw data and better decisions. Claire doesn't decide doses. Parents decide. Doctors advise. Claire illuminates. In the last 2 months through GSD, we built and tested our first prototype on real family data. After months, Claire surfaced patterns that improved glucose stability, enough that endocrinologists are requesting to meet us. We are live collecting wearables and building our pilot study. We are raising pre-seed to run a 30-day pilot with 25 families to measure how long a patient's blood sugar stays in the safe zone using Claire. We start with type 1 diabetes because the pain is urgent, repeated, and measurable, but the same intelligence layer can power millions of daily health decisions across chronic care. We are building in a new category between raw data and real understanding. I spent 2 decades as a research scientist developing 4 FDA-approved therapies for kids with rare diseases to survive against the odds. My partner, Andreas Taylor, a former Genentech NVIDIA certified data scientist, we both help pharma test diseases by building the intelligence layer between data. Now we're moving on to help prevent diseases by building the intelligence layer between data and decisions to help families live longer, healthier lives, so families spend less time worrying and more time living for generations to come. Thank you.
Wonderful. All right. Thank you very much. Let's open the floor to questions. Rajesh?
Yeah. Thank you, Elaine. Thanks for this. I know that this is a genuine problem. In fact, I know a family, that has an issue like this. The child is much older now, fortunately. But what is the size of the market, right? Because is it venture scale, I guess is the question.
Yes, like for instance, right now, you can see it's a 37 billion market missing. We have 1.8 million children, pediatric children worldwide who has type 1 diabetes, and that doesn't count, adult numbers too.
Okay. Yeah. I guess we'll follow up offline, but again, what is the numbers and so on and so forth of ability to pay? Yeah.
Yes.
All right, Laura.
Yeah, I guess 2 questions. Your platform touches on FDA approvals. What's your regulatory classification, and have you engaged with the FDA? And I guess the other question I have is, what do you see as your revenue model in terms of who's going to pay you? Is it pharma? Are they patients? Are they hospitals? And what would a contract look like?
Yes. So, as you can see, we are not making dose recommendations. We are looking at patterns of previous data of patients, and we see what occurs. For instance, one patient, when they swim, their glucose level goes down really fast, the sugar, and so they have to, if they're injecting insulin, they have to worry about, their lows. So, for instance, we don't suggest how much to inject, but we show the parents what has occurred previously, and so they can make that decision. And that does not, we hope to just start there and maybe eventually look into the FDA approval. Your second question was, how do we get paid? We would like to go first through patients, ones that really urgently need it. and charge a like monthly prescription. And then, like we have said, endocrinologists start seeing the data, maybe move and speak to them to introduce to other patients and also into their clinics. And lastly, we can work with Kaiser with like the codes and the codes to get the insurance to pay.
All right,
Thank you so
Allison.
much for your wonderful question.
I just had a general insight. Are you a disease, diabetes specific platform? And what do you think of something like GLP-1s, which started out as disease, diabetes specific, and then went mainstream into just longevity and weight loss? Because like something like this, do you want it to be diabetes type 1, very specific with this disease? Is there any way that you can ingest the data, take in more data, and expand it to longevity, wellness, peptides? Because that's kind of the mainstream trend right now is GLPs, peptides, and then people doing general functional health, precision monitoring of their body and their signals.
Yes, that's a great, wonderful segue and question because it's like an insight you have. Thank you for asking that question. And exactly that. So we want to do type 1 diabetes because it's urgent. And for instance, it only takes like a few months to actually show the change. And patients and parents, caregivers are really urgent to make it work. So they're more able to be compliant and do the process, ingest all these datas and work with us. And then once we get that established and the model well established, we would like to go into chronic care such as like neurological diseases, for instance Parkinson's, be able to amazingly like use wearables to prevent patients early on to say, hey, you have BRCA and maybe you have Parkinson's. Think about chronic care, your blood when you sleep, heart rate, and then work with those patients. And eventually, if we are able to look at people's early signs for longitudinal data, for like if you've been recording your data for a few months, years, then you can think about how to prevent diseases when they first arrive and go to the doctor to help extend longevity. Thank you so much.
All right, Naresh.
Yeah, hi, Ellen. So my question is primarily around moat. Do you have any partnerships or any exclusive relationships with any of these device manufacturers? And if not, what stops from the next software company to get the same data and produce something similar?
Yes, that's a wonderful question. Of course, everybody's wearing right now an Oura Ring or a Apple Watch, and a lot of those people, especially for Apple companies, they're not as private and their data is not as safe. And we want to have longitudinal family data. For instance, a patient who has type 1 diabetes will be on our platform for a very long time. And so that brings a fingerprint to how their lifestyle is, how the changes is. So those data is very specific to each individual person. So I think that's the moat that we have. And of course, other people will try to go into this area, but if we are able to grow and people love us, then hopefully they stay and continue using it.
Do you have any existing relationships with any of the device manufacturers? Anything exclusive?
We just started through GSD for 2 years. We would love any intros.
Okay, sounds good.
All right. Is that all for questions? Is everything clear? Deborah?
Yeah, so I've spent a lot of time listening to pitches like this for various diseases and various health and wellness apps, and the adoption is horrific. So how are you going to get to your target market, get them to change their habits, and understand that what you're telling them is really valuable? It's really hard. How are you approaching that?
So that's why our wedge is with type 1 diabetes caregivers. So caregivers are the ones who especially parents, they are very dire need into like nighttime sleep. As you can say, 1 out of 20 children and under 40 die in their sleep.
Now, hang
So
on.
parents.
I understand the need
Oh,
for
yes.
it.
Okay.
What I don't understand is how you're going to reach them and get them to adopt.
Oh, yes. So we're working through advocacy groups, and through talking to individual parents and going one person at a time and really understanding the customer and being very specific with customers' need. Does that help
Yeah,
answer the
you'll need
question?
partners. It's really hard. It's really hard. Sorry.
All right. Alicia, the last question.
Thank you. It is the customer acquisition cost is going to be extremely hard and long, as Deborah said. But are you HIPAA compliant? How are you going to protect your patients and your customers' data?
Yes, that's very important. So right now we're going to be storing the data on an external hardware, and so it won't be in the clouds. So that's how we're going to currently protect the HIPAA, and then work forward and learn more as we grow.
Thank you.
Thank you.
All right. Wonderful. Thank you for the presentation. And let me next invite Miles and perhaps Justin, representing Preston.
Yes.
Right. Whenever you're ready.
All right. Share our screen.
Let's try to keep track of time. So you guys feel free to time yourselves as well. Right. Let's go.
One moment. I want to
No
make
worries.
sure we got the audio shared. It didn't give me that option. I don't know.
You might need to click on the black panel that's going to appear. And I think it's 3 dots, and then you need to put a check mark on share audio.
Yeah, that's the thing. It actually did not give me that option, and I think I know why. Yep, there it is. See,
Mhm.
wow, that was tricky. Okay, glad we did this before.
Sure.
Oh,
Let's do
okay.
this.
Can you see it?
Yep. Yep.
All right, everybody. Hey, guys, I'm Miles.
And I'm Justin.
And we're the co-founders of Presto, the first fully agentic startup that's pioneering the enterprise AI workforce that learns, remembers, and executes. I'm a serial startup entrepreneur with over 14 years of experience, have a successful agentic startup exit, and I'm a go-to speaker in multiple professional communities on agentic engineering, with over 200,000 members in each community.
I'm also a serial entrepreneur with a successful exit, and I've had multiple breakout products go viral across the internet, being featured on Joe Rogan, the front page of Reddit, Cypress Hill, and I also have extensive Edge AI sales and marketing knowledge. I recently took first place in the largest national security hackathon in the United States, put on by the CIA, the DOW, and Anduril.
We started by building an AI employee that we needed. In March of 2026, I built the first self-improving, self-learning multi-agent AI employee called Preston. And since then, he's been able to complete over 60 projects in just 5 short weeks, some fully autonomous, end-to-end. See, enterprises need digital workers, not more software. Expert labor costs are out of control. Existing enterprise software just digitizes, it doesn't actually do the work. Other AI tools still can't replace skilled professional workers.
That's why we built Preston, the world's first AI employee for enterprise that operates 24/7, executing work across enterprise systems, learning companies' processes, and remembering the organizational knowledge.
It's a massive untapped market opportunity of over $4.5 trillion in U.S. computer-based occupational wages annually, with our goal of taking 6% of the market.
We have amazing momentum right now with over $100,000 in ARR and growing. We have $350,000 raised, with our first customer being so excited about our product that he became our lead investor. We have $2.4 million in our qualified pipeline, and we recently filed 2 patents with the largest law firm in Silicon Valley, all within 14 weeks.
Join us in our seed round and don't miss out on scaling the very first fully agentic startup.
That was great, guys. But we'll be a lot better if I was in it like this.
Oh my gosh, very impressive. All right, let's open the floor to questions for Rajesh.
Hey, thank you. Thanks for that. My question is actually, I guess probably the big elephant in the room here, which is how are you gonna, sort of protect yourself against, cloud code or
Sorry,
code?
can you repeat that question? Stop share so we can see it.
Yeah. No, I was just saying that, the big question would be, right, all application, layer or even agentic layer folks, the big thing they have to deal with is, the foundational models creeping up, right? And penetrating the enterprise. And, you've seen all the deals that OpenAI has done with consulting firms and Anthropic as well with private equity and so on. So the big question really is, this 100K ARR, what I want to understand is what has worked for you, right? What has been the initial traction? And I would love to get an MRR number because I know a lot of these are pilots, right? So that the big thing is, of course, is it going to translate into annual revenue is a next question. But what is how are you going to protect yourself from Codex and Cloud Code, I guess, would be a very obvious question right now.
Yeah, got it.
The reason that we're always going to be ahead of these larger organizations like Anthropic and OpenAI is because we're model agnostic. So they are going to be locked into the models that only their company produces, and we don't have that obligation. We're actually using 45 different models, and they're all the best in what they do. And we're able to use that to our strategic advantage to create the best possible digital employee, regardless of what model we're using.
Second of all, we also have 2 patents that are pending by one of the top law firms here in Silicon Valley. They're extremely defensible. But even if we enter into a world where not, we are currently moving at a pace that will ensure that we are ahead and we stay ahead at the actual digital AI employee layer and not at just another chatbot. And we're moving so fast that we don't foresee a situation where a company would overtake us.
Yeah, our agent is self-learning, or our super agent is self-learning and self-improving. So if in order for somebody to get ahead of us, that they would have to basically start ahead of us, because every single day our agent gets better. Every single query and input, our agent gets better.
Yeah, thank you.
I mean, that's fine. Yeah, I mean, I do have a follow-up question about competition, really.
Hey, Regis, let's move to the next. Give everybody a chance. Go ahead.
All right, we will have Frederick and then Kelly and then Deborah.
Yeah, well done, guys. All 3 of you, including the AI model. So I assume that as the LLMs get better, that means automatically the agent gets better. That's just a statement. My question is, from seed to taking 6-7% of the total addressable market, love to hear your story, how you're gonna go to market basically with such a huge aspiration. Please go ahead. I love that you got exits already, both of you.
Yeah. And I mean, so our first client is super excited about this. We already have, circling enterprise clients that are excited, but we actually have a very unique wedge that is not well understood in the market. It goes beyond forward deployed engineering, where when we look at a company and employment and understand the industry, all the individuals I've talked to and mentors in the industry said it's impossible to implement full AI employees without extreme backlash. Impossible to implement, some would say. But we have unique insights into starting a core special forces AI team and then expanding a new startup within an enterprise and being able to keep up with as a forward deployed engineer, building forward deployed engineers supporting our enterprise clients. So we have a unique wedge I haven't heard anywhere in the market yet being successfully done, but one that's absolutely powerful, one that is unique, and one that we're able to expand and scale very strategically with the right LTV to CAC ratio in the whole market.
All right, Kelly.
Thank you, Victoria. Hi, Miles and Justin. Great to see you again. So the biggest bottleneck in legal tech is liability. So what kind of measures you have to help the law firms to identify AI hallucinations?
Yeah, so we're definitely working with law firms right now, but as an internal tool. So our liability is very low because we're not an external facing product yet for these people. They're just using this for their internal deep research, and doing documentation, all sorts of stuff for their law firm and other enterprise customers. But we actually have dealt with the hallucination problem by grounding our model in with extreme memory. So our memory system is able to, basically remember way beyond any context window that's out there right now, and it's able to that grounds it in the sense that it's not hallucinating like other models. We also are dealing with 45 different models. So if it does have anything that it's not sure about, it's going to run this check across multiple models. And when you take those and you say that 80% of them are saying one thing and 20% of them are saying something else, then you can tell that this 80% of it is definitely going to be, the accurate choice.
Yeah, and so it's internal for legal, but we are definitely expanding to other markets as well.
Yeah.
Yeah.
Okay, Deborah, and then Sarah and Allison.
Okay, so excuse me. By the way, you guys are extremely talented. I know you know what you're doing. So that's not what my question is. Microsoft, IBM, and a whole bunch of startups are building what a lot of people call digital advisors as opposed to AI employees, but they're kind of the same thing. And yours sounds like it could be better than a lot of those, but does that mean that your adoption will be better? Maybe the market's big enough for a lot of players, but how do you think about that?
Oh, okay. Yeah, so I mean, yeah, there's a massive difference between, advisors, telling you how to do the work as opposed to actually do the work. The value creation from actually doing that we haven't even seen yet in the world. I think we don't really have the paradigm shift in our mind yet about how massive a value creating this shift is. And
That's
to
true.
properly capture the value of that, we're going straight for the full work cycles and implementation. The
And
biggest
do
problem is that
enterprises love it or hate it?
Oh, they love it now.
they will say they love it at the top. The reality is what we're discovering, and what I've discovered in my experience is that middle management all the way down silently and quietly sabotages these implementations.
That's
And
right.
so
I've just been at a bunch of conferences speaking about that subject. That's
yeah,
right.
and this is a silent, like very not so understood kind of part of my conversation earlier. And so we have very unique insights into this, and is our wedge going to market.
Yeah, the
And it's
human
proven
element
successful.
is tough to overcome. It really is.
Yeah. So we create a special forces team like within the organization that's a small group of people that's using our product and within the organization, and then that small group expands into becoming the whole company over time, and they just keep bringing more people on.
And we are very diligent about this. I've done this in a former company that I've had successfully.
So my
And
tiny
so
piece of advice is you'll find some stories where what you did made everybody's lives better in the company, and you need to tell those stories so that they understand what they're getting out of it, not just that they're being forced to use it.
Sure. Yeah, that's one of many
Wonderful.
pillars that we have. Absolutely.
Okay, we're going pretty over time, and we do need to finish in the next 40 minutes to ensure that we cover everyone and that we have a time to basically let judges vote and announce the winner. Unfortunately, I think we have time for Sarah's question, but Allison and Naresh, can you put your questions in the chat? Thank you very much. Let's try to be succinct and precise. So, Sarah, please go ahead.
Yeah. So thank you, Victoria, for giving me the chance. I have a very short question. What is your go-to-market wedge, and which one painful use case gets the customer to say yes first?
Okay, we already answered the wedge multiple times. What was the second question?
Describing it a bit more, like which one painful use case gets the customer to say yes first?
Oh, it's yeah. You want to talk about Fernando?
Yeah, I mean, so Fernando as a law offices of Fernando Hidalgo, he's actually laid off about 75% of his staff and is using our product to do all the work that these people were doing. And this was our first customer that has took this on. And it basically does all of the busy work that people have been doing and all of the kind of like brute labor, like, hey, I need to go research, thousands of documents and, figure out all of these, references for this court case that I'm doing right now. And and I need somebody to take in all the faxes and document them and put them, organize them in a spreadsheet for me so I get all of this information. Or I need to call 30 clients right now and give them a piece of information and get a small bit of information and organize that. And so Preston can go and just do all of that, almost instantly.
Yeah, it's a huge unknown pain point that's massively solved by Presto. That's why the law offices of Fernando Hidalgo became our lead investor.
Also, integration into their system. So tons of companies use all sorts of different software. A lot of it's really like legacy software that doesn't even have APIs. And our system can actually, it has its own PC, so it can run all of that legacy software on his VM, and he's able to, access these programs just with the visual aspect with no API and point and click and go through all of this just like he would if he had an API.
Wonderful. Let's try to keep our answers more concise, just to ensure that we can answer more questions as startups. So thank you very much for your presentation. And let's go to our next company, Silas InsurTech.
Thanks.
And I'm going to ask Alison, Rajesh, and Naresh to please put your questions in the chat. Thank you very much. All right. Whenever you're ready, make sure that you're unmuted.
Hi, everyone. Can you hear me okay?
Yes.
Perfect.
So whenever you're ready.
Thanks so much, Victoria. It's a pleasure to be here today. Thank you all so much. My name is Maria, and I am the founder of Silas InsurTech. So before I tell you a little bit more about what we're building, I'd like to share something a little bit strange about myself. I really love insurance. I started my career straight out of university and I joined AIG, relatively well-known insurance company in the USA. And I absolutely loved it. For me, it was the perfect job for me. I was a commercial property underwriter, and the job was fun. It was dynamic. It was analytical. Every day was a crash course in a new industry, and for me, it was exactly what I was looking for. Unfortunately, however, after many years in the industry, I realized that the industry that I was so proud to be a part of ran on emails, broken spreadsheets, and very messy PDFs. And over the course of many years, I realized that I was actually spending far more time doing manual work, trying to understand the data that I was being sent than actually doing risk analysis. I lived this problem for years before I decided to solve for it. The issues that are predominant within insurance to this day, despite being one of the biggest industries in the world, is we deal with outdated legacy systems that are fragmented, they're messy. We deal with messy data, PDFs, spreadsheets, emails, and oftentimes I spend far more time trying to decipher this data than actually understanding it. And I spend a good significant portion of my days doing manual reviews. So I decided to leave insurance. I learned how to code and I started Silas InsurTech to build the solutions that I wish had existed when I was an underwriter. At Silas, we are turning messy insurance documents into decision-ready risk intelligence within minutes. We help insurers quote faster, reduce manual review time, and free up enough capacity so that they can actually bring in more premium and generate more revenue. The numbers speak for themselves. We have a couple of clients already live, which I'll get to in a little bit. But from the data that we've been able to gather from the clients that are currently using our platform, we've been able to reduce manual review time by 50 minutes. Data is now structured in minutes as opposed to hours or days. That was typically the turnaround time within insurance. And as I said before, this frees up not only the time for underwriters to actually do their jobs a little bit more quickly, but it allows them to bring in new business as well and bring in business that is more profitable. As I mentioned, we went live a few months ago. So we went to market at the beginning of this year. We've secured 2 insurance clients already. We've got 1 in trial at the moment, and we are due to secure them by the end of the month. Our projected ARR from these 3 clients is about $450,000. And one of our clients said it best. What used to be a manual headache is now handled in seconds. As a result of his use of our platform, he now no longer needs to hire as many people as he was intending to because he's able to do his job significantly more quickly. Why now? The timing is perfect in insurance. Insurance is finally ready to modernize. It has traditionally been quite conservative when it comes to AI, but their legacy workflows simply can't keep up at the moment. AI adoption is accelerating. What we've seen in the market is that sales cycles are reducing, and they're moving from experimentation to implementation within months, as opposed to the 12 to 18-month sales cycles that we used to see. London is our wedge. I'm currently based here in the UK, and we're starting here, the birthplace of insurance and the place that I know best. And we begin to start scaling into the US in 2027 as a result of having gained significant amount of traction and having great momentum here in the UK already. We have raised $780,000, about £600,000 so far in our pre-seed round, which we closed in October. Our lead investors were Blockchain Founders Capital, and we had notable insurtech, fintech angel investors in the UK, Alan Morgan, Mark Ransford, and Matthew Rolfe, who are helping us build out this vision to the scale that we're looking to achieve. And of course, none of this is possible without our team. The reason why I believe we will win in this market is because we are insurance professionals building for insurance professionals. We have Anzur, who's our CTO, leading the technical efforts with a background in computer science and an incredible passion for AI. And of course, a number of incredible advisors and investors backing us as well. The intention, the vision for Silas is that we become the intelligence layer for all commercial lines. We started in the UK, as I've mentioned, and we're looking to expand out across different lines of business and across geographies as well. Thank you so much. I look forward to your questions.
Thank you. Wonderful. Rajesh, go ahead.
Thank you. Two questions. One, what does the competitive landscape look like for underwriting? Number one, are there any established agentic AI incumbents, right, that you have to deal with? Number one. Number two is the 450K ARR that you mentioned. Are these enterprise clients, those two pilots, or two customers plus the other one? If it is enterprise, I want to know whether are you going first doing a pilot, or are they willing to sign annual deals already?
Yeah, great questions. I'll answer the second one first and then go back to the first one on the competitive landscape. So the two clients that we've secured, we've actually completed a number of pilots last year. These are two signed enterprise clients, so they've come on board as official clients now. We're no longer doing pilots because our products, we've been building them for a little while. They're established, they're accurate. So we don't need to do pilots for the modules that we have live already. For our underwriting intelligence feature, which we're building currently, we will likely do some pilots for that, but the clients that I've mentioned are signed and they're deals. On the competitive landscape question, yes, of course, this is a gap in the market now that people are starting to spot. The way that the landscape worked in the previous years was that a lot of companies were focused on the optimization of workflows, where we come in as that intelligence layer that sits above the optimized workflows. So we have a number of companies that have kind of solved for that problem, and now more companies that are coming in on that intelligence layer aspect. Where we're seeing is that a lot of startups especially are starting to realize that this is now an opportunity, and so they're a little bit behind on that. So our best bet is that we're going to build as quickly as possible and start to secure those clients. We also have an edge where a lot of them are not founded by insurance professionals, ex-underwriters. It's quite rare that an underwriter leaves the industry, and as a result, we have a really unique value proposition in that every single one of our features is really, really built for purpose and customizable.
Wonderful. Kelly?
Thank you, Victoria. Hi, Maria. Great to see you again. Last time we spoke, you mentioned leveraging insurance brokers as a distribution channel rather than just selling direct to underwriters. So have you mapped out the specific economic incentive for a broker to use your platform?
Yeah, thank you, Kelly. Really nice to see you again. I remember that conversation, and actually off the back of that, we brought on a new angel investor who has significant connections in the broking space. So that was Matthew Rolfe, who I mentioned in the presentation as well. We're mapping that out at the moment, and I think it will be a really great distribution channel for us. So we're already starting those conversations.
Wow, that's great.
Thanks, Kelly.
All the best.
Thank you.
All right, Sarah?
It's great to see you again. How do you protect sensitive insurance customer and commercial risk data when processing documents through AI?
Really great question, Sarah. Really nice to see you again as well. So we do this in two forms. We're in the process of getting our ISO 27001, which is the European equivalent of SOC 2. So we're building in a way that meets those regulatory requirements, and we're protecting our data. From a more technical perspective, what we started to do is actually, when we're receiving in any confidential information, We don't store it, we synthesize it. And we basically replicate the formatting, which helps us train our models without actually using sensitive client information. So we synthesize it, we basically replicate that data in the format without using real client information and immediately destroy the originals. So that way we're keeping everyone really safe. Thanks, Sarah.
All right, Alicia?
Thank you so much. This is very interesting. The two largest insurance companies in the US have laid off 28% of their workforce, and they're getting into other areas, including underwriting. How do you compete with them creating their own models?
It's a really interesting question. So I always talk about our competitive landscape always being against other kind of companies that exist, but also the internal build. And I actually hosted a webinar on this a few weeks ago where we brought on board people from Zurich, people from, really big insurance companies to discuss this because I was curious as well. And where I'm seeing it is that a lot of projects that are built internally take about 2 years to come into play, a lot of resources, capital intensive. And once the projects are done, when they're built internally, they're now outdated because tech is moving a little bit too fast. So where we're seeing a real opportunity for us is where we can add immediate value. The larger enterprise clients are looking to buy, whereas when it's more kind of focused on their competitive edge and it's really core to their requirements and their kind of optimized workflow functionalities where we sit above them, then they're looking to build internally. So for things like scrubbing data, for strategy mapping, for risk appetite matching, all of that sort of stuff, they're happy to look externally, and they're starting to do that more so because they've realized they just can't keep up with innovation in the same way that a tech company could.
Thank you.
All right, Allison?
Thank you. I love what you're doing, especially for an old industry such as commercial underwriting and using traditional data, improving the workflow. So I'm coming at it from commercial real estate investor in California, where I have a hard time finding commercial insurance in the first place. And when I do, it's very expensive. One of the things that I've given the insurance company is basically to use non-traditional data. I think that's where the market will go. And hopefully that will bring companies like State Farm, other companies back into California. What do you think about using satellite mapping data, non-traditional data, cameras, right? So if you have like a surveillance camera and maybe like California, Los Angeles, if you're a commercial real estate investor in the SF Bay area, your rates are really high. And so, it doesn't really make sense. But if you are in like micro pockets that are good, your underwriter doesn't know about it. So they need to have access to non-traditional data. I really do think this is where AI will come in, not just with the traditional workflow and data that you have access to already. What are your thoughts on that growing market?
I think it's a really good point, and it's something that we're thinking about a little bit more as well, especially because I used to write a lot of US insurance. So I used to do a lot of the US focused business. And I realized that a lot of the accounts were dealing with punitive pricing only because we didn't have access to that data. So one part of what we're doing next, once we build out the underwriting intelligence layer to kind of complete the set for commercial property, energy, and power, is to look at data enrichment. And it's something that we're looking into at the moment. It's not an area that we're delving in right now at this current point, but it will likely be the second half of the year, maybe Q3, where we start looking at different opportunities like that. Good to hear that it would be useful as well from your perspective. Thank you, Allison.
All right, wonderful. If you have any questions, feel free to ask in the chat. And great job. Let's proceed to our last startup. And after our last startup, we're going to give judges a couple of minutes to finish voting. And then we're going to announce the winner, and that'll be about it. And I'm going to encourage each one of you to connect on LinkedIn if you'd like to chat. And with that, let's invite Lorcy, our last startup. Last but not least. All right, whenever you're ready, we see you.
Right. Hi, I'm Yasha Todorovich. I'm the founder of Lorcy. Lorcy is building the decision layer for education, the system that determines what every student should do next. I have a pretty great team that combines education, expertise, and proven AI scale. I personally have spent years building orchestration systems for Fortune 100 organizations and saw firsthand how schools struggle to coordinate learning decisions by sitting on a school board. Our CTO, Viktor Kuznetsov, scaled EVA AI from an MVP to a $100 million company, building an AI systems used by millions. Our COO, Tia Green, runs operations at a 140-year-old independent school and understands the challenges educators face every day. Together, we're combining real classroom experience with proven AI execution. Schools use dozens of learning tools, MAP, IXL, Savvis, Canvas, and now AI tutors. Each creates valuable data, but no system coordinates them. Teachers are still left figuring out what a student should do next. Lorsy becomes the coordination layer. We connect the existing systems and turn fragmented data into a clear recommendation. Teachers know what to do, students get targeted support, parents stay informed. Data comes in from tools schools already use. Lorsy identifies patterns, detects gaps, and delivers the next best action to teachers, students, and parents. We're already proving this in real classrooms. We're live on student data today. Rivermont Collegiate has signed a full school design partner agreement with a planned K-12 rollout. We filed 6 provisional patents, already secured approximately $400,000 in commitments. And here's a little video, if it'll work.
Is there a sound?
They're supposed to be.
Yeah, we don't hear that.
Yeah, there's no sound, Yaza.
All right, it's just some music technically. So this is just a little view of what we have for our system. So we have a $25 million cap to expand into additional schools. Oh, I'm on the wrong slide. Over $30 billion in spent annually on educational technology. AI made every tool smarter, but nobody built the intelligence layer that connects them all. That's the opportunity that we have. So a $25 million cap to expand into additional schools, deepen the platform, and establish the intelligence layer for learning. We believe the company that determines what students should do next becomes one of the most valuable layers of education. And that is it.
All right, wonderful. So let's start with Peter.
Yeah, thank you for the presentation. I just wanted to understand a little bit better about who do you sell to, what's their title, what's the decision process, and then what budgets do you tap into?
So initially we were looking at private schools, then this is kind of expanded into the public school system. We can sell on a per seat basis. We can sell on a per school basis. The homeschool market is obviously a market that we're going after as well. So it can be from parents to school boards to principals. Currently in Nevada right now, after the NASA conference, which is Nevada Superintendents Association, anywhere down to the teacher level can actually institute these things in their classes. So we've had a lot of interest from Clark and Washoe counties, and that's from the public school side of things.
Wonderful. Sarah?
Yeah. So how does Lorsy decide what each student needs next? And is it based on AI prediction, teacher rules, or any assessment data, or a mix of all of them?
It's a mix of everything. So we're not a curriculum company. What we do is we take the signals from the kids' lesson plans. So we're connecting all of these different curriculums, the Savvises, the IXLs, the cons. We can connect anything. It's just a matter of creating those signals, being able to go back to a lesson that maybe didn't hit them correctly. And we can also send the data back to the curriculum providers to make their products better as well.
Okay, Jason?
Yeah, hi, thank you. Yeah, Peter asked some of my questions, but I'll do another one. And what's the real impact of the solution? Is it going to help these schools with their ratings and their funding? I mean, what's the real impact you're trying to do here? I know the students are a part of it, but how is this helping the schools? Because it seems like you're not very focused on who you're selling to. You mentioned a bunch of different people you're selling to, so I'm not quite sure. Maybe you have multiple impacts
So
you're
the
looking
goal
for,
of
but
this
yeah.
in general is to reduce the teacher burnout. We want to take the administrative time away from the teachers to be able to focus on the students. They can from these signals, we can create focus groups. We can send worksheets home to parents. We can do automated messaging to parents. It's to realistically, it's to make it easier for the teacher to be able to focus on the students and be a better teacher with that too, which then is the benefit to the student.
Okay, Allison? I think you're muted.
You're on
Allison, I
mute.
think you're muted.
Hi,
Go ahead.
Allison. Hi, I used to be the team president for a very large public school system in the state of California. So when we talk about teacher burnout, it's usually public schools because they don't have those resources. So I want to come from the perspective of an LA public school district, a Chicago public school district that will have hundreds of thousands of students. And I do foresee, like, if you become successful, you need to sell to one of those organizations. It'll be like millions of dollars a year. So having exposure to that as a public school, a parent teacher president at one of those organizations, the IT system is very old and nothing is connected. How do you plan to really integrate and talk to these very old school systems that's been around for 30, 20 years? Some of them, like Canva, are new. But these are very difficult type legacy systems that you would need to have to like tie in. How do you plan to do that and sell to, a very large unified school system with a lot of bureaucracy?
That's a very good question. So with our current design partner, that's kind of a similar situation. We don't have the best technology at Rivermont, but we've been able to connect to these. Ideally, we want the Savises and the IXLs and the Canvas and everybody else to be able to give us API connections. We're running on the cloud, so it's connecting them is not even, it's not the hardest part. It's I guess getting it to the point to where these partnerships will make things a little bit easier. This is kind of a Victor question, probably more so than a Yasha question, but at the same token, I completely understand where you're going there.
Okay, Arash?
Yeah, it's just follow up on what Allison just said, and I think you alluded to some answer to that. I think for you to succeed in this market, the best GTM, at least that I can think of top of my head, is partnering with any of these existing incumbents and upsell from there rather than trying to reach individual school districts or what have you, one by one. So, do you have any partnerships? What's your GTM strategy in short?
So yeah, in short, we're trying to work with the schools directly at this point in time to get that the traction we need with these providers to be able to come onto our platform. We want it to be the marketplace for these apps and curriculums to where schools can pick and choose what they need and what fits the student the best.
Okay,
Okay,
Jason?
thank you.
Jason and then Deborah.
Yes. Hi. Interesting. Like, as a segue to what Allison and Naresh mentioned, it's very complicated to sell to large public school systems. I spoke at LA USD in front of 300 principals as a keynote speaker. It was a miracle to get through. And so your distribution and sales, in addition to, I guess, your algorithm baked into your product, right? It's not just mechanical. Of course, you want to make sure that the efficacy of the data that goes into your black box, you spit out something. Your mission, your impact on offloading teachers, fantastic. Thumbs up, okay? Now, before Gen AI came in with full force a couple of years ago, I'm extremely familiar with education, ed tech, and all that. A lot of ed tech companies in the old days are wiped out, okay, because of Gen AI. So you really need to be super clear on your product, on how it's better, and your sales and distribution. And it's not easy, but once you succeed, it could be quite interesting. Like Allison mentioned, focus on the large school districts. You might want to, of course, start small first. So there's another set of questions that I have, but we don't have time for that now. Any comments?
So I can, when we initially started this, we were going to go after private independent schools, and we were looking for the kind of the smaller market, just because you have the alphas and some other school systems out there that are really pushing the AI. But the difference between us and them is that they're trying to eliminate the teacher. What we want to do is make the teacher better. I think that's one of the things that makes us unique, as well as we're taking the MAP scores, we're taking the state assessment scores, and rather than one time or three times a year, whatever these when these assessment tests take place, we're actually hitting it on a daily, a weekly, a monthly schedule, basically, to where they can really a teacher can sit down and within 30 seconds be able to learn where a kid is at, where they need to go. Are they behind? Are they ahead? Can we push them farther? How do we do this? And that's what our system does.
Okay, Deborah?
I used to be in education, so this is really interesting. Selling direct, unless you get a huge system like LA or New York, is so hard. So I'm curious to know why you don't partner with somebody like Pearson that's already, deeply into the education market. But my question related to that is, how do you measure outcomes? Like all of the outcomes you've described are things that the teachers and the schools and governments, state governments look at very closely. But how do you know that your recommendation for outcomes is better than what they already do? How do you know it's better?
So initially, what we're doing is pilots with schools to kind of do a land grab. We want the hook to be with the teacher, to where the teacher doesn't want to live without this anymore. And otherwise, how can you really manage or see the outcome of the teacher burnout? That's something that's, I don't know if it's quantifiable at this point in time. The happiness scale of the teachers. We want
So
them to.
it's more for the teachers and the school system than it is for student outcomes per se.
So that's not entirely true, because if when the teachers are happier and the schools are providing better education to the students are going to have that outcome as well, and you're going to see that in their test results.
Yeah,
And
you'll
with
have to
that being
quantify
said,
that, the difference between what they were doing and what you're doing.
so with that, when you start a new school year, so you've used this system for 3 quarters, let's say, you
Mhm.
start out the next school year. The first quarter of a school year for most students is being assessed over again to find out where they need to go for the next 3 quarters.
Right.
With our system, you're day one, we know where they're at, and we can continue to get a quarter back. So quantifiably, we're going to be able to show that they're going to have more time to learn throughout the year rather than being
Okay.
assessed throughout so much time.
Yeah, you'll do better if you can show that.
Okay.
Thanks.
Wonderful. Let's give judges, okay, Alicia's super last question, just because this is the last started. And then we're going to give judges a couple of minutes to finish voting. All right, go ahead.
Yeah, thank you for the presentation. Very interesting. I think what the edge here is to tell students and teachers and parents what to stop doing because it's not working. Because I've been a professor for 28 years and it's overwhelming. You have a new system, you have to train, and we just don't have time for that because we have time to educate and to connect with the students. So I think the edge has to be completely different. It's what do you need to stop doing? What do you need to stop forcing to do? Because it's not working. I think that's a great edge. And as I mentioned in the comments, you can't, it's not from a financial perspective, it's not worth to invest, to raise the money and invest to create the sales platform. It's much better to go and connect with somebody that already has that so you can focus on creating great technology. You don't have to waste your time and your money in creating a sales platform.
All right. Okay. With that, judges, please finish voting and we're going to announce the winner in a second. How about this? Judges, can you raise your hand if you haven't finished voting yet, just so I have an idea?
Hey, and Victoria, on the voting, there's no submit button, right? It's just like the slide
Yeah.
up, that's it.
Yeah, okay.
Okay. Yeah, let's finish for judges to finish voting. But Gary, how do you feel about the presentations? I think they were marvelous.
Well, I mean, you know, two of the companies weren't even companies. Actually, three of the companies weren't even really companies 14 weeks ago. So you're seeing them in a very short period of time where they've raised money and they've come up, they've taken an idea and there's something they're out and getting agreements signed. So I'm really proud of them. You know, this group from pre-seed to Series C is the most diverse group we've had. But again, we focus on scaling, right? So I'm proud of where they are. Obviously, if you compare Will's company with some of the other companies, you know, they're vastly different, but they weren't even in existence 14 weeks ago. They weren't even a company. So here we are. And I'm really proud of where they are. They've taken these ideas and turned them into a real company. And it's really important. And they're from all over the world. And I think the future of building companies in Silicon Valley is not about the business model canvas or design thinking. It's about scaling. If we can't scale, it doesn't matter, does it?
Yeah.
It's because of all of you here, right, who have great ideas, who've built companies and created some of the most notable companies on the planet Earth. You know, your ideas, this is the next generation coming out that fortunately has some of the most sophisticated tools on the planet at their disposal. I wish I would have had them.
Felt. All right.
Victoria, apologies.
Judges.
Is there a formal kind of process for voting, or we just text you, or what do we do?
It's I think
missed that.
France was sharing voting links with you.
Ah,
So it's
sorry.
an
Is that an
individual
email?
voting link.
Yeah, it's in the email. There's a voting
Okay.
link.
Thank you.
I think France could also possibly send it in direct messages to you here. So, Gary, while we still have judges with hands raised, which means that they're finishing voting, do you want to maybe ask a couple of people what they thought? Just
Yeah,
so
yeah. Allison, how was it for you?
I really enjoyed the diversity, the topics, and also the scale of the company. You have an electric car company with like FedEx as an investor. You have a company that just like started. I'm really impressed with the indie one, also the deep memory one as well. I think there were a lot of like interesting insights, the commercial real estate, healthcare. So there's vast diversity in terms of founders, their gender, their background, and also just like their intellectual insights. And it really made me think. So thank you for including me.
Yeah, no, thank you. You know, we're in 73 countries around the world. I just came back myself from Nigeria, and we go out there. You know, we believe that intellectual capacity is evenly spread, and everybody needs to have a chance. And one of the wonderful, you know, I'm in Palo Alto right now, right? One of the wonderful things we have here, Allison, is that Palo Alto, Silicon Valley is a hub to the rest of the world. And sometimes people forget how great it is here, right? This is where people come and people go. They come to build their companies and they can get out and extend to the rest of the world. And we need to do that. You know, there's so many challenges on the planet and so much data around us. We need to be able to have these kind of companies to make our lives better.
Yeah.
And you know, we think about it, each one of us has about 300,000 items in their personal cloud. The entire web in 1996 was 257,000 websites. We each have more information in personal cloud, the entire web. The problem is each of us in our own world is following the same trajectory. That by that I mean doubling every year. In 5 years with the Internet of Things, we're going to have 10 million items. As smart as we all are here, how many times the last 2 weeks somebody said, I sent you a message, did you get it? Where'd you send it? I sent it to your email. Which one? Will you send it again? I can't find it. It's crazy. This infobesity problem, we need to solve it. You know, I told you, Allison, about my, you know, I built a cancer vaccine for my dog. I'm not a doctor. I'm just a poor country boy, grew up on a farm. But I put my dog in full remission of cancer. I had stage 3 kidney disease. I used the AI to come up with a model. Then I completely resolved my stage 3 kidney disease with mesenchymal stem cells. My wife had triple negative breast cancer. It built the protocol. I took it to the doctor and I just followed the progress. My wife's in complete remission of cancer. Now, I'm not a smart person like you. I didn't go to Stanford University and not a fellow, but I know one thing, these give you superpowers, right? And each one of us here needs to use them. And what I've done, we have 193 companies. Our next batch starts on the 7th of July. We're going to start with 8 more companies. These companies, we need to give them a chance, Allison, to be able to succeed. And it's kind of people just like you, right, that have been at the beginning of Google and beginning of some of the greatest companies in the world that can help these entrepreneurs. And by the way, they're great investment opportunities. When you start getting 50 or 100x on these companies coming in, everything changes. So, but most people aren't going out and finding them. It's not so easy going to Lagos, Nigeria, right?
Yes.
It's not so easy to go to Gdansk, Poland.
Thank you for doing all the legwork for us. We appreciate it, Gary.
We're all on the same team. You know, we're all on the same team. You're my friends, and I care and value each one of you, but we're all together here to be able to take this out. Nobody that I know is doing what we're doing in a laser way like us. It's my family office that's put this together, and I've taken money out of my own pocket to do it. Why? Because I wasn't sure it was going to work. I wanted to make sure it worked before I brought all of you on board. But now it is working, and these companies are taking off.
All right, wonderful. Judges, can you let me know, can you lower your hands if you finished voting? All right. All good? Okay, wonderful. So let me close the voting and share my screen. I'm going to let you guys know that the higher the score, the higher the place, and we're going to have first, second, and third place. So with that, let me proceed. All right, let's let it load. And with this, let's announce third, second, and first place winner. So third place is Presto, second is Silas InsurTech, and the first is Indigo Tech. Congratulations. Thank you everyone for being here. And please feel free to connect on LinkedIn. There are plenty of links in the chat. But also, I know that everyone will be happy to chat between investors and startups. So, Gary, any last words? Great for having you here.
I want to say thanks to the startups. You did an incredible job, and I'm proud of each and every one of you. You know, the name of the company is GSD for a reason. It's Get Shit Done, and in each one of you, in your own ways, even with some of the personal challenges you've had, you've moved forward. I'm real proud of you. And to all the judges here, thank you very much for taking time out of your schedule. I appreciate each and every one of you, appreciate you, and look forward to working with you on all kinds of different projects and opportunities to invest and to be able to make our own little dent in the universe. So I want to thank you for taking time out of your schedule. I know it's valuable, and we really appreciate it. So thank you very much, and thanks to the startups for coming. Let's go out and let's get shit done, and let's not turn back and run as fast as we can. Thank you.
Thank you.
Thank you, Gary.
Great job.
Thank you, everyone.
Thanks, Gary.
Thank you very much.
Thank you.
Bye.
Take care, Rumi.
Yep. Bye-bye.
Thank you. Bye-bye, everyone.
Bye-bye.
Arrivederci, bye.
Bye-bye. Have a
Bye-bye,
great
Lorenzo.
day.
Bye-bye.
Bye-bye.
Thank you. Bye.